Good morning, everyone. Welcome to Midwest Market Solutions Insider Comments. It is Monday morning, June the 12th. Thanks for joining us here this morning as we look at what's going on over the weekend and what we can expect today. Now, the weather models are in major disagreements in here. If you follow a weather forecaster who relies on the U.S. weather model, they're going to talk very wet conditions for the spring wheat belt this week. Very wet conditions, especially in the eastern corn belt, but better chances of rain across some of the dry areas of Nebraska and Iowa, Minnesota, of course, North and South Dakota. The European model, which I think has been a little bit more consistent, is much drier and trending drier this week. So there's major disagreements. The trade, of course, does focus in on the U.S. model, and that is why we are down in the overnight and early morning hour trade. We're 5-6 cents lower in corn and soybeans, and 6 to 8 lower in wheat futures. Minneapolis wheat rallied last week, September, the new crop up to around 618, 620 area. Found a lot of resistance there and has pulled back. That could be at least a temporary high, especially if these rains that are forecasted do materialize. We're about 15 cents lower than that as we traded overnight. Private export sale announcement this morning, 130,000 beans to an unknown destination. This is old crop soybeans, so we continue to move old crop supplies. Our export pace is well above what the USDA had forecasted for the entire year. That makes their choice to not increase the export numbers on Friday morning's supply and demand number very questionable. We are moving soybeans. We're already above, as far as how much we've shipped this year, we're already above what they're forecasting. So very questionable decision on USDA's part to raise those numbers. Weather is the main driving factor in here. Until we see the U.S. model change, I think we stay under a little bit of pressure here in corn, soybeans, and wheat markets. And if it never changes, if it's accurate, we're going to continue to stay under pressure here in these markets, as those rains will be very beneficial. Crop progress out this afternoon. That'll be kind of a key here. Corn should drop ratings. Corn ratings should drop 1 to 2, maybe 3%. Spring wheat, I've seen conservative forecast call for 1 to 3% drop, and maybe more aggressive forecast, a 5 to 7% drop in those condition ratings. So that could be a surprise to the trade if we get a 5 to 7% drop. That put us 5% would put us at 50% good to excellent, well below last year, one of the worst crops in history, and would mandate, I think, another leg higher. But we shall see if what the USDA says. In the livestock trade, very choppy action on Friday. Should get a little strength in the feeder cattle this morning with the lower corn prices. Hogs look to be choppy, two-sided as well. They hit our technical objective on Friday in the hog market and backed off. Have a great day. Good luck. Good trading. It's going to be a volatile day. Be safe and make sure you use stops if you are in the futures. Have a great day. Talk to you soon. This has been Brian Hoops.